So this is Redbox's basically SPAC presentation. So they combined with Seaport Global back in last October 2021. This came out last September 2021. Basically their SPAC overall kind of overview, business overview. I think about running through it real fast just with you guys. So really what happens is they're trying to shift to the kind of more online content, almost like a Netflix style, which you think, hey, they're very, very, very late. But I mean, again, they are trying to do that, dude. They do have like free live TV on demand. You can rent movies digitally, which is, again, I mean, it's not surprising that market is pretty saturated already. This isn't anything like totally new. I mean, they have a simple user interface. I mean, the app makes sense. I think their cost is a little bit lower than some other companies out there too. So there's definitely some value props there where it could make sense potentially. And really looking at the overall, like, kind of their generational change they've seen here. I mean, it's really gone from like hardware trying to go more software side. It's almost like a Netflix was almost like, 10 years ago, back in like 2012 timeframe, and it's already 2022. So they are definitely behind the curve. Again, but they run on all the major apps out there. I mean, all the major smart TVs, etc. You can download the Redbox actual app itself. All this is saying right here is basically, hey, as people get more streaming, they cut the cord from cable, etc. There's more value out there. There's really nothing new. It's basically the same thing you make with an argument we make with Netflix or HBO Max or any other streaming platforms like Disney Plus, for example. So this one is actually interesting too. It's basically saying, hey, they actually have a lot of brand value, which they do. I mean, they're a very, very well-known brand. I mean, they have a strong rental market, or they did have a strong rental market overall. I mean, they have huge reach. They have a huge email distribution list. I mean, there's a lot of value there just from their network they have alone, just from the past, decade plus of, operating a business. So you can see right here, basically in this purple, they're basically trying to add digital revenue overall. Notice there's no timeline here. There's no dates here. It's more like hypothetical projections. I mean, so predominantly right now, the majority of their actual revenues from physical renting, the actual DVDs, wherever else it might be, or games at the actual physical Redbox locations. They do have some TV video on demand revenue right now. It's not much though, but is definitely growing. The problem is just a small baseline. It's not a huge revenue stream for them. It's looking at, hey, conversion rates, hey, here, total customer value, looking at, hey, like potentially $1 to $2 billion of value out there for them and their kind of their cohort they're going after, which again, it's possible. It definitely makes sense. I mean, Redbox does have a loyal base, I'm assuming. So, I mean, again, we'll see. Again, this shows their actual transition kind of from like on demand to overall kind of the premium video on demand channel. So, I mean, they're saying, hey, Q2 2022, basically make that pivot. And I mean, this might be Apollo management. This might be that they might have invested in. They might say, hey, there actually is a demand here, almost like for a niche player to come in and kind of their video on demand service and actually offer that, kind of fill that gap there, where other streaming platforms may not be able to fill. But look at it right now. There's about 40 million people or households in the U.S. right now that do not have any kind of streaming platform at all, potentially too, but they do actually use Redbox. So there's actually that last kind of like almost like laggard gap of like people who are basically late to streaming overall, and this might be their first actual entry point in kind of the streaming universe in general. So this is their CAGR, their compound annual growth rate projections for their on-demand, basically their software side streaming platform. Notice here is 2021 estimates, 2022 estimates, and they're saying 55 million, 193 million. I do know for sure that this 55 million more than likely missed. But again, we'll see if it's growing. I mean, it is something too. It is growing at this kind of rate, though. Even if they miss a little bit in 2021, maybe 2022 might be a miss too. But if it's growing at a steady rate, I mean, could be a business there potentially if they can drop the cost down low enough to really survive and raise cash just from debtors or anybody else they can. Total Redbox kiosks, I mean, it is just absolutely saturated. I had no idea it was this saturated across the U.S., but I mean, it is a lot of kiosks overall. So they generate 400 million basically weekly retail impressions. I mean, that's a lot of overall impressions. That right there is very valuable. Those both from an ad side, digital and hardware ads. I think there's a lot of value there. So they're saying basically their incremental margin and competitive advantage basically is a mixture of like physical, actual hardware you actually go rent from physically, or the software side where you can stream from. So what they're saying here is, hey, they have a very diverse business, both with the actual physical kiosks and the digital streaming platforms. They were saying, hey, 2021 estimated revenue of 345 million. They actually did miss that. It came in at 288, so they're well below that. So, I mean, look at these CAGR growth rates. I mean, just this growth from 2021 and 2022. I mean, this is just absurd growth. They're saying, hey, post-COVID, they're going to grow 100% plus, going from like 288 million to $712 million. I mean, it's just, this is almost a made-up projection. It's really, really weird to me how it's like, hey, you double revenue coming out of COVID, but then from 2022 to 2023, you have a barely, a tiny uptick right there. And this is almost like, hey, putting bars on a PowerPoint slide and be like, hey, our revenues can go to the moon, and then from there you should invest in us. I mean, it's a very weird overall forecast. That's why I'm a little confused by it. Overall titles and everything else too, how many titles are running, some of the actual data itself here too. But I mean, if nothing else, I mean, they have a cash problem. So if they can't raise cash and they can't drop their expenses down enough to actually compensate for their loss of revenue, then they're going to be done. That's just a fact of life, at least for the long term. Short term, who knows? We'll see what they're going to do. Some of the actual financial statements, etc., what they're forecasting, some peer analysis. So basically, they consider the biggest peers like Roku, also a Netflix too. I mean, these are hard because the scale is so much different than Redbox is right now. But they're saying, hey, right now, if enterprise value versus 2022 revenue, they're saying they're undervalued for some of these peers. But the problem is their cash burn rate is so high, and there's so much leverage, so much debt, where it's, hey, they may not survive till 2023 potentially too. So that's the big question you have to ask yourself as an investor if you're going to invest with them at all. Basically saying, hey, theatrical release slate is changed because of COVID. Everyone kind of knows that already. And then basically showing, hey, some of their PR they've had out there showing, hey, they're shifting the company around, trying to go more digital strategy, etc. But again, we'll see. We don't know what's going to happen with this one, but it'll be interesting to watch. Hey, that was Redbox's pre-SPAC investor report. I mean, it was pretty optimistic. As you've seen, really 6 months, plus post-SPAC, it really has fallen apart pretty badly overall. But yeah, be sure to sub, like, comment down below, and that's the exchange.